Good day. This is the Eye of the Storm podcast with the weekly update for the NASDAQ 100 being recorded on Saturday, June the 22nd, 2024. It kind of was a very interesting week, but then it kind of didn't end initially the way that I thought that it would. I thought we would see a lot more volatility. We did initially within the first half hour on Friday's session. We did see some strong volatility, but then the market basically just kind of popped higher and stuck to a very tighter range than what I thought would occur. Now, let's try to update this picture. We're going to start with the NDX, the cash market. And I'm here on my weekly chart. And basically, there aren't any changes to this bigger picture. So let's just review it very quickly. We remain in the process of putting in a primary fifth wave, and that began, primary wave 5, began off of the October 2022 lows. Now, within primary wave 5, there will be 5 waves of intermediate degree, labeled here in yellow. So far, we only have 1 and 2 complete. We remain within intermediate wave 3. And then within intermediate wave 3, there will be 5 waves of minor degree, of which we have 1 and 2 complete. And we've been looking for the completion point for minor wave 3. Now, that's what I believe we may have hit. And I'm going to go over that in just a moment. So if we have hit minor wave 3, then we're going to go into a minor fourth wave correction. And that, again, may have started on Thursday, carrying over a little bit into Friday, and will continue. So now let's just kind of start to bring them down in time factor so that we can start taking a look at inside of what this all could suggest. So again, looking for the completion point of minor wave 3 may be in place. Let's start breaking it down. I'm going to look at the daily chart. And in the daily chart, we still see that we have minute wave 5 still in progress, possibly complete, possibly. So within minute wave 5, there's going to be 5 waves of minuet degree, of which that minuet wave 5 may be complete. So once again, inside, and I'm going to break this down to the 4-hour chart, inside of minuet wave 5, we have 5 waves of sub-minuet degree. Now, I kind of flipped the count a little bit inside of this just to kind of clean it up because I thought we'd start to get too small in terms of what's actually happening. So I'm going to go quickly down to the 1-hour chart so that we're inside here. And initially, I have sub-minuet wave 1, 2, 3, 4. And then inside, we have this sub-sub, 1, 2, 3, 4, and then a 5. Now, here's the deal. I feel that I've put the 5 there because I can count up 5, and it did almost get to that 100% for sub-minuet wave 5, and that was at 19,991. And we got as high as 19,979.93, or basically 19,980. So we're shy by $11 there. And so I thought, okay, I'm going to put the 5, but I'm not necessarily putting the balance above it, which would be the minuet wave 5, the minute wave 5, and then the minor wave 3. I'm leaving those out, and here's why. Because I can't yet, right? So what I've also talked about is that I'm looking for confirmation via a 5-wave structure down on an hourly chart. Now, what I have at best so far, some people may believe they can count this as 5, and this is the bounce off. But I'm going to break this down. I'm going to go all the way down into my 15-minute chart. So there's that high. You can see that's where I put the 5, if indeed it's going to hold. So what do we look for? We look for 5 down. Well, okay, so let's start. 1, 2, 1, 2, 3, 4, 5. 3, that's kind of like weird. and best is a 3. You see that? That could be, okay, let's say it was a 4. Then we got A, B, C. This is a 15-minute chart. So I'm like, no. And then followed by 1, 2, 3, 4, 5, which actually has overlap in it. So it continues to be extremely bizarre. And this is the market just trying to figure out what it needs to do outside of Elliott. So again, when we're playing against such a large expiration, which pretty much went off without a hitch, we saw continued decay in a lot of the AI sector areas, particularly in Broadcom. We saw some in NVIDIA, some in Supermicrocomputer, where they really started to knock it back down. But then there were rallies in between. We saw Apple, even though it closed down to, it fluctuated intraday and gave us a lot of play. So let's go back to this chart. What possibly could be going on? Let's say I have 1, 2, 3, A, B, C, B. Now, does that suggest this actually comes in pretty much at 1.382? So if this is going to be a small 4, then it does fit in that a fourth wave can produce an irregular B, and that's what this could be. And then we go up in 5 to put in a C wave. And so the 4 could be complete here. So again, 1, 2, 3, A, B, C, 4, a little bit large. I get all that. But then we start down again. 1, 2, 3, 4, 5. A, B, C, we dropped. Granted, after hours, they brought it all the way back up. But that could just be, again, settlement, expiration, etc. It just gets to be such, to be honest with you, it does present a challenge for Elliott, if those that follow Elliott Wave, in labeling and then counting. Now, I believe the larger picture remains intact, that we're looking for the completion point for a minor third wave, and then we will have a larger minor wave 4 correction. Now, flipping back out, let's just go here. There's the area that I'd be looking for minor wave 4 to come back down into. And as I've discussed before, down in the bottom is, let's just say, 17,000. Up at the top level, it's 18,480, 82. So that's a pretty wide range for a minor wave 4 to come down into. And it will come off in an ABC. Now, whether that's going to be a flat or a zigzag, basically, since I'm looking for this to come off in 5 waves on my hourly chart, I'm going to suggest that it's likely going to be a zigzag. And possibly back down here now, let's go back to the 15-minute chart. If I'm still looking for this now to break down inside of a third, well, then that could be 1, 2, 3, 4, and we're coming off in a 5, and this is 1, 2, and we start lower. Now, where can we start to find support for all of this? Well, one thing that I can kind of do, if we are working on 5 down, I can kind of come in here, and I don't need to do that. I can do it just like this. I can go 1 and put it over here. If I'm going to call this 4, then really what am I looking for? Well, 100% equality, 19,660, but I need it below that. So we're looking at 1.618, 19,573. And could it do that pretty quickly? Yeah, it really can. It really can. And remember that I've discussed that the way that this whole expiration came off, I just think that there was a lot of adjusting to do, and then prices were kind of fixed to where larger participants or just the market was looking to pin this expiration. And that also goes for the individual underlying stocks. So what we got going on is the possibility that they pinned it back up to get out of positions. So in other words, there were enough calls that likely would be exercised. And if the short on the call, so the seller of that call wanted to sell that stock to whomever at that strike price and take the short, because the anticipation is that on Monday it's going to go down. So again, speculating there on my part in terms of like what could be behind some of those closes, some of the different areas. But we saw this in like NVIDIA. We saw this in a lot of other areas. Now, there's just so much going on that people want to hang on to this. It's bullish, 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 and this has got to happen and that's going to happen. So they're continuing to throw their funds into the market. Now, if they're coming in, they could be coming in via an ETF. Who knows? But the bullish case remains because, again, if we just even look at the Elliott on the bigger picture, I'm just looking for a minor fourth wave correction. And I already pointed out that the territory. Then we rally in a minor wave 5 back up to new additional all-time highs. That puts us above this level. That puts us up into these levels on the cash market. That's up there, folks. This is getting up there. And this is where I'm thinking minor wave 5 might end up. Now, that's just a very, very, very tight prelim, but that's what I'm looking for. And then we come down again in an intermediate, because what do we get up there when we finish minor wave 5? Intermediate wave 3 being complete. And then we come back down in an intermediate 5th wave. Excuse me, go back up and come down in an intermediate 4th wave, go back up at an intermediate 5th wave, and once again move to new all-time highs. Now, this could carry us through the end of the year or possibly even in the start of 2025. So a lot of things out there. So I'm not wanting to speculate on, gee, Fed is going to cut, inflation is going to be tamed, all these things are going to happen. That's what they're spitting out at us, folks. But what do we have? What do we have? A continuing inflationary period of time where it is getting really difficult to say that they're corralling inflation. Primarily, in my humble opinion, is because they produce these inflation numbers by excluding food and energy. Gee, what has now become the largest expense for most people out there working 9 to 5 to feed a family? Well, they got to get to work, then they got to get home, then they got to buy the food. They cut out food and energy. How do we heat our house? Or put on the air conditioning. Those rates have gone through the roof. Food and energy. Well, let's take them out of our inflation reading and then tell the world we have inflation under control. I just find it a little bit weird. But that's something that I've had to live with, and we've all had to live with for years and years and years, because that's just the way they construct the reading, construct that view. Now, what's the reality? If we are all looking at our employers going like, we need more money because we can't survive. Even as a retired person, we're like going, okay, government, how much are you going to go? So the government would love to see CPI come down. They would love to see that number come down, because then they don't have to provide as much additional money for this next year for retirees, for Social Security. So there's all this battle on how to control things, right? But is it real? Does it really suggest what honestly is happening underneath all of that? So are we kind of having something blow smoke at us? Like, oh yeah, this is all going to happen. This is all going to come through. And don't worry, we're probably in the fourth quarter going to cut one time. And then the balance will be coming out in 2025. Well, yet to be seen. But the market is playing this, well, they say, so we're going to go ahead and move in now. Well, we see that AI is a strong, indication or a strong sector. So we're going to go into all of that now. Should be a safe place. Well, we have two larger corrections to come, followed by two additional rallies to new all-time highs. And then I think that's where the rubber will hit the road in terms of like, okay, have we been sold a false bill of goods in terms of what is the future here? Now, this is just a conversation. I have no data that's saying, the Fed's always just kind of hanging on to something and not really telling the truth, other than how they calculate the CPI and the PPI. They take out food and energy. Now, let's just wait and see how this all plays out. But right now, that's the best I can do with an Elliott count. It does suggest that we should have a minor fourth wave correction that is not a crash. It is just a little bit stronger downside move than what we have seen over the last 2 years, I'm going to say. A little bit deeper than what we've seen since that low in October of 2022. So once underway, we're going to be able to fill in a lot of blanks in terms of how far we think we can get. Because remember, I still need to get this 5 waves. If it doesn't, let's say we walk in and the market turns and starts to go up and we get back above 19,800. Well, that's going to be a stronger indicator that this is going to be left as 3. Then what? Well, this 5 is not correct. If we bring it back out to here, then we're likely looking at that this 3, let me just open this up. This is the alternate. Now, please forgive me because I know many people, it's like, well, you just switched the labeling. It's like, folks, it's not me. It's my interpretation of the market, but this is what I'm seeing. But I have to put it all together, and what I use are my rules, my guidelines as to what could be. And the other thing that you're always taught as an Elliott analyst is that you have a preferred and an alternate. Well, this label right now is my preferred. My alternate would be is that this 3 is actually up here. And this is this 4. And that would be that we don't go much lower. Maybe down to here, but we don't go much lower before we turn and we start hitting up. Now, that may already be underway. If that is the case, then we're likely going here, or at least above 2,000 in the cash before that 5 is put in. Now, if this 3 goes here and that 4 goes there, then this number shifts as well. And if it does, well, it's going to be higher than 2,000, 20,000. And then we start lower, and then we start to come down. Well, when can that happen? Well, next week, the week after. Well, we still have to see how it's all going to be treated coming out of this very, very large expiration. What do we have left? We have the quarterly expiration next Friday on June the 28th. The last expiration in the month of June is the quarterly, and it ends the second quarter. They may carry all this right through, this upside move right through to the end of the second quarter. Because don't forget what we now have to deal with. Window dressing. Everybody's going to come in. You're managing money. You want to have the best showing at the end of the quarter to return back out to your clients. So are we going to see a turnaround? And Apple's going to run, and Nvidia's going to run, and Google's going to run, and Broadcom will run again, and Meta will run, et cetera, et cetera, et cetera. It doesn't take much. They have some that may start to go down, but if you can control that index and get it up to where you want it to be via the stocks, well, okay, could happen. So that could happen next week. Going to have to be strong. So again, like I've been talking about, what really is going to come into play is what happens next week. And I'm breaking this back down to the 15-minute chart to say what happens basically right at the start. Okay? Do we start going down? And then we'd be looking for likely something down into here. Finish and give us that first 5 down, much cleaner. Then we're looking for a bounce, and then we're looking for this thing to continue. Okay? So that's the cash market. Let's go back out to that 4-hour chart. Open it back up, but let's open it here. Let's take a look. We're not in serious trouble when it comes to the moving averages on the 4-hour chart. We have the 13 turning and going flat. We have the 20 going flat. That's not telling us super weakness. Those become support. 13 becomes a resistance right now because it kind of got above it and closed below it. But it's support. The 50 still angling higher, but starting to lose the arc. If we continue to move lower, this will go flat. Same here. Not the worst case. So stay open. Now, a lot of people are also asking me, well, how does one trade when we don't have any, we don't know where that top is? It's like, you're right. How do you trade? Well, there's different styles of trading, and there are different ways. Are you trading long term? Are you trying to determine when you get out of a position, when you don't get out of a position? Or do I start loading up again for another run up? Well, I cannot dictate how people should trade, nor do I make recommendations. That's not what my work is involved with. I personally am a day trader. So I can walk in and trade every day, regardless of what the market is going to do. Not always as easy when a market gets choppy, I'll give you that. But there's enough to do in both directions that I usually could walk out with some money in my pocket every day. But I'm not carrying positions overnight. So individually, you need to go to your other rep, or you need to break it down on whatever instrument you're long or short in. Because there are instances, like for example, in the SMH, which gave a clear signal that it was going to drop, and it did drop from 278 to 268. I think it was below 268. So that was a great short, to be honest with you. But how long do you want to hold on to it? So again, I personally have 3 trading rules that I try to adhere to. The first one is like, what's my trigger? So you have to know what is your trigger. And if you're going to use Elliott Wave and you're looking to get out of a long on a long-term basis and move into a short on a little bit mid to long-term basis, well, then what's the trigger? When you can read 5 waves down on an hourly chart. 5 waves down on an hourly chart. 5 waves completed. So that's understanding that wave 1 may be consisting of 5 waves. Wave 2, 3. Wave 3 will be 5 waves. Wave 4, 3. And then wave 5 will be 5 waves. So it's a completed 5-wave structure on an hourly chart. Then you're going to get 3 waves up, and that would be where you'd want to start to do a new position or the additional legs down. Okay, using Elliott. But until such time, you're waiting. You're waiting. Now, moving averages. So we're back over here. Now we're going to look at the futures market. Again, the 3, the 4, we're inside minute wave 5. 1, 2, 3, 4. I've got it as high as where I'm not declaring minuet wave 5 as being complete for the exact same reasons as that I didn't do it in the cash market. Now, I've cleared out a lot of the additional fibs that we had coming up here, but I've left on the minuets. We exceeded the 2.618 at 20,285. We got up to 20,371 and then slid pretty hard. 4-hour chart kind of looks like we got maybe a 1, 2, 1, 2 coming off. Very possible. Very possible. Okay, that's the 4-hour chart. Let's start. And so in case I put on the sub minuet 1, 2, 3, 4, 5. Because we kind of, we put in a decent high above 20,271. We got up to 20,003. What is it exactly? 20,371. So we got 100 points above. I was like, okay, that's pretty good. And I can count up 5. So on the futures market, it all kind of fits, but I'm leaving it open. Let me break it down. We're coming down into here, and we're going to go, let's just go look at this. This is what I want to see, hourly chart. Same deal, folks. Is it 1, 2, 3? Or is it just 1, A, B, C, 2? But you can see in an hourly, we don't even get those clean breaks that we do on the 15. So let's break it down and look at it on a 15 and open it up. What do we got? 1, 2, 3, or 1, 2, 1, 2, 1, 2, 3, 4, 5, 3, A, B, C, 4, or A of 4, B of 4, C of 4, and now we're in 1, 2, and we go down. You can see on the cash, see the difference? That's what they did after hours. They bought it from 19,000, let's see what that low was, 19,973, 974. I got it back above 20,000 in an hour. It was amazing, but I just think it was all expiration, all expiration. So we'll see what happens. We'll see what happens here. So this remains open. And again, if I just bring it back out, let's just take it to the 30-minute. The 3, the 4, if the 3 goes up here, and this all is a 4, and then what we'd be looking for, okay, that's it. We just keep rallying now. And then I got to run my fibs one more time. 1, and then put that's the 4 down here, and the 3 goes up there. Then I'm running the following here all the way over to here. This is a guess. This is a guess. This is not. So I just want to show you what that potential could suggest. Okay. Let's just say that's the 4. Well, what do we got coming off? Well, let me just change this color. 618. Not going to be what I'm looking for. Let's go here. And it's going to be this color, that gold color. And we're just going to put all that in. And we're going to say, okay. Now, if the 3 gets moved and the 4 comes over here, 20,428. Is that capable of next week? Oh, it sure is. It sure is. If they all come back to put these positions back on, and now looking out towards the 28th to the end of the quarter, it sure can. So you can see why I'm not putting anything else up there. I can count it as complete, but that would have to be confirmed by this being 1, 2, 3, 4, and now that's just the 4 goes here, and we're going to slide, and we're going to slide lower. In which case, where do we have support? Well, we have support at 19,756, and then nothing in there, and our next levels are down into here. And if we start coming down that far, it's going to give a lot of credence to the market. And we managed to do 5 waves down, 5 discernible clean waves down. On this hourly chart, it's going to slant this and give a lot more credence to that completing all the way up to -3, and we're in the beginning stages of that -4th wave. Now, if that is the case on the futures market, here is our window. So we've got 17,381 on the bottom, and we've got and we have 18,967, 18,970 on the top. And we'd be beginning from a high at 20,371. That's a pretty strong drop for position traders, for swing traders, and definitely for day traders. That's a lot. That's a big. And guess what? Still the same deal, folks. If a minor fourth wave comes down here and we get a minor fifth wave, we're going above that level, 20,371, and we're going to start heading up into here or higher to finish the to finish the intermediate third wave. And then we come down again, likely to the same area. If minor wave 4 comes down here and we go racing up in a minor 5, then intermediate wave 3 is expected to come back down to the price territory of the fourth wave of 1 lesser degree, which would be that minor fourth wave, not done yet. But if we're projecting that this is going to be the area, well, guess what? We come down there again, go back up, and another new all-time high to finish intermediate wave 5, primary wave 5, cycle wave 3. So if I'm even just using it on an Elliott basis, folks, and I'm looking at what could possibly be coming out, when we're going on a Fed that's like promising rate cuts, promising we're going to meet our term, we're going to meet the goals, promising all this stuff, it's like, are they blowing smoke, or are they just really not wanting to upset the market? I mean, I don't know. But are there enough geopolitical things? Certainly. They may hold this thing higher right through the presidential election. And then all hell will break loose one way or the other. Possibly. What happens if geopolitical situations around our globe really get inflamed and then really having a pull on the economies of the world? Right? Russia, Ukraine, Israel, Hamas. What happens if China decides we are going to go reclaim Taiwan, and possibly they can do it without striking any military blows? What's that going to do? What's that going to do for artificial intelligence? What's that going to do for the chip makers? I'm just tossing it out there because obviously we have a Fed that's like, maybe they're looking at that. I don't know. These are things that are still out there. So to say with a definitive attitude of like, oh, no, there's just no stopping this thing, we're just going to keep going. That's like, if all things were to just dissolve and disappear, yep, it's going to keep going. But if they don't, and they continue to be problematic, well, then it's a hope, a whim, and a dream. All right, so this is where I'm going to finish this up. Going back out, the moving averages really are not in severe condition here. We got them all coming down and sitting on the 50. This is the 4-hour 50. That's pretty strong. That is providing support. That's what we would think. And guess what? It's going flat. And the 200 is going flat. So if that breaks on a moving average basis, our next support is 19,291. That's kind of where the 200 is sitting, the 4-hour 200. Now, bringing it back down to there, definitive that we're inside that minor 4. Right? That would be a tall tale sign. So this is where I'm going to leave this. I'm going to get this done and get this posted. So next Elliott Wave daily update will be on Monday, June the 24th.